What's going on, y'all? Springs Trades coming to you live with another week of breakdowns. Hope everybody's having a good trading week or a good week, I guess. Trading week has just started. So hope everybody had a good trading week last week. I just wanted to come on here and do the chart breakdowns that I usually do. Again, do these live. And what I'm going to do is share these to the Discord. Just give me 1 second and then we should be good to go. Give me 2 seconds. So the markets have really been kind of trash this past week. Only because, I mean, honestly, not the past week. There really has not been great price at all the past couple weeks. Excuse me. And so this is usually the time where I kind of struggle as a trader because I'm very much reliant on higher time frame systems. But I'm usually very, very like I'm transparent in my trading because of that. So give me 1 second, guys. I'm dropping this in the chat. But I'm pretty transparent with my trading, and I'm pretty transparent overall that like, man, this week has sucked. The last couple weeks have not been great at all. Yeah. So it's really sucked the last couple weeks. And it has a lot to do with where the markets are currently at, and I'll show this right now. So first and foremost, I always forget this every week, so I do want to start with Forex Factory and then come back to the charts. So coming into the week, we don't really have a lot of news going on Monday. You can see there's a bunch of yellow folders, but nothing red that's really going to drive the market volatility wise. There's some after hour stuff on AUD and JPY, so be careful there. Going into tomorrow, no red folder news again. No really big news across any asset. There's some 6 a.m. news, 8 a.m. small news, so it's 10 a.m. yellow folders. But we usually pay attention more to the red folders just because those are going to be the highest volatility ones. 8:30 Wednesday could be a really good week. Core CPI that could really do some things. Going into Friday, Thursday, there's going to be unemployment claims. So again, 8:30 again, that could be a potential news driver. And then going into core CPI on Friday, and then JOLTS at 10 a.m. So this could be the back half of the week, a little bit more volatility here. There isn't a ton of news right now, but I wanted to break down these charts and kind of just get a better understanding of where we're at and where we're sitting. And so let's go ahead and look at dollar first and foremost. You guys know, again, if looking at dollar is the reason, I look at that first, and the reason for that is because if we understand where dollar's going, we can understand where the market's going. And this price action is just honestly really shitty, right? Like we've been in this range pretty much since July. Like it's been June, July of trading back and forth. We thought we are going to get a breakout to the upside, haven't. Ran all the way back down here, took sell side, and traded right back in the range. And so what this is higher time frame consolidation. If I go to the monthly time frame, you can see that we just been chopping around, right? And ideally, I still do think we're going to run lower, right? I think long term, we haven't lost sight of the fact that we are going to take this low here. But just, we need to see what's going on. I could see the market trading up to this high and then running lower, but this is the monthly time frame, so this could take a lot of, a very long time to play out. So again, just knowing the big picture that we're in chop, I do think that eventually the dollar's going to get down to 89. I think that's what's going to happen. Running this to the daily time frame, again, you can see that we did come out and take out the high of the last few weeks, the swing high here, right, and then trade lower, starting things out with Monday. So that could potentially be the weekly open liquidity sweep of a buy side and then trading to a level of sell side, which could be this gap here. Overall, though, it's just this is so choppy that it's like it's hard to get really a long-term bias on this. And because it's hard to get a long-term bias, you end up trying to be more reactive than proactive here. And so jumping to euro again, same thing here. We had a huge gap that opened up on Monday. If you can see here, we gapped down to start the week. We started here and then ran all the way lower, right? And what that really formed is a nice little liquidity sweep, right? If I go to the weekly time frame, you can see that we took out last week's low there, and I actually traded back down to this low of November and then swept that out as well. So a lot of liquidity that was ran over the past, day or so with that candle. But overall, we've been trading in this range, right? And you have to be, I called a couple things. I said, if we ran this and broke structure and inverted this gap, that we would run at least to take that low, and we did. Unfortunately, didn't really give us a lot of clean setups in here, so we just been chopping around. Um, Same thing here, right? And so again, when you're trading in higher time frame consolidation, you can't really rely on the daily or the weekly for a bias. You have to get down to a smaller time frame, whether it be the 4 hour, the 1 hour, and kind of take your swings based on that. So that is kind of where we're at right now. Unfortunately, we saw the market dip, 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 test once, twice, three times to take out this low, then open and gap down below, and then immediately close back above. So this is most likely is going to keep running higher. I could see the market, again, when the market's trading in a range, you're just looking for the highs that it can come and take, right? And so we could see the market really come back up to this level again and be long when it's trading in that consolidated range. Otherwise, there's really nothing here. 4 hour time frame. I'm going to break this down here. You can see that we did break structure here. We opened up the gap down here, ran this low, traded back up, and closed above this high. So that's a liquidity sweep, right? We took out the low last week too sneakily. Very sneaky, took out the low last week. So what do I want to see here? Again, I'm just rolling with the punches. There's not a great setup in this, right? Because the higher time frames aren't giving us what we want to see. But ideally, I could see us maybe running this back to the gap. That's another 100 points, right? But long term, I don't really know where we're going, and I don't think if anybody's telling you they know where it's going to go after this, then they're lying. So, what do you do in times where it's chops? Well, you can try and trade these lower time frames and have the 1 hour and the 4 hour as your main structure, or you just stay out and you just kind of depend on what wait for a good potential setup down the line. Um, 6B, 6B. Same thing on British pound. We were trading in this range here. This one looks a little bit more bearish, but ultimately we gap down to this fair value gap here. And a lot of times these gaps are sneaky because they really just set the trend for the fair value gap or the gap that you're going to see. And so that month, March, we ran down here, traded into that weekly or that monthly fair value gap. If we go to the weekly time frame, you can see here that we did close below this once, and then the next week we closed right, or obviously the current week we closed right back into it. So just it's currently respecting this low. I could see a world where we keep running lower. It's just so choppy right now. Same thing here. If I go to the 4 hour time frame, you can see the market consolidated, manipulated, and took out the highs. I'm going to look at gold because gold has had a lot of volatility, but even gold has been chopping, right? Daily time frame, you can see the high. We set an initial high here, we set an initial low here, and we've been trading. This is a wedge pattern, right? You can see the highs are getting lower and the lows are getting higher. So I imagine it's going to stay like that for a while. Yeah, so let's look at the indices. This was the sweep today. That was crazy. So we gapped pretty far down. We opened up at 24,000, or we closed Friday at 24,600. We opened up at 24,400. So it was like a 200-point gap. Ran the lows down to 989 and then turned around and ran back into the range. So this is like dog shit price action, man. Like it's just been chopping for the last 6 months, right? It's really since like set this initial high in October, and really the last 5 months has just been us chopping back and forth. It hasn't been great. Um, this is an opportunity not really to you can't really, you could blow an account in this, and because you don't really have a directional bias, you think you do, right? And then it kind of takes it away from you. And that's what consolidation does, is it chops you up thinking that the market's going one way and then runs the other way. So, yeah. So, I mean, where am I looking at here? I mean, we took these lows. We took all these lows, all this liquidity sitting there. So I wouldn't mind us taking the highs. Why? Because we grabbed a bag of sellers. We need to match them with the buyers, whereas the buyers at above old highs. We also have this trend line liquidity building where we see these lows getting consecutively lower, call that low resistance liquidity, and we can see the market really run up and take this high. So I do want to see the market come and take 25,000, 25,522. It's got to be a good setup. But as of right now, I mean, it's still just choppy. I think this wick and this trading back into the range, especially here, gives us some type of confirmation the market wants to run bullish, but we don't really know for sure. So again, it's just kind of being more nimble, less so much about the daily bias, more about the weekly, or the hourly and the day and the smaller time frames. Same thing here on ES. You can see we ran these lows, we traded into this old gap. We took out pretty much any existing liquidity that was sitting in this run, and then traded all the way back up into the range here. So what do I want to see? Again, I want to look at the high of yesterday, the high of yesterday's high, which would be Monday's high. And then I'm going to be looking at 987, which would be the high of Tuesday. I'm sorry, last Friday, not Tuesday. So those would be the two levels that I'd be looking to target for this potential the next couple days. Again, maybe ultimately this high at 690 is the high for the week that we'll target. But again, just looking for buy side. We swept a lot of liquidity here and closed back in the range. So anybody will be looking at this as an opportunity to go long tomorrow. But that's all you can really do. I mean, you can really only take things like a day or so at a time until you really get a good run. Let's look at YM. Same thing, really. The gap down. We took out a lot of liquidity here, traded back into the previous low, running that sell side. I would expect us to run for the highs. Again, the high of yesterday and the old high here. I think we could really trade into this gap. And so that's all I'm really seeing right now. I mean, there's not a ton that I'm really excited about. I mean, the only things that, like, at least from a long-term perspective, there might be opportunities to trade like intraday, right? And finding like retracements and pullbacks and things like that. It's not necessarily my strategy. I'm looking for, a good manipulation of the Asian range for the most part, but there's not really too much of that you can call out in the daily and the weekly. You kind of need to be in the lower time frames to trade, and if that's not your style, then you just need to stay out of the market. So it's been really dirty price action the last couple months, and I'm not a huge fan of it. So if you're wondering if you're trading, you're like, yo, this is hard. And it's always, trading's always hard, but sometimes it's harder than others. If you're watching this and you're like, man, this really, like, this resonates with me because I'm not getting any of this and it's just not making sense, and I keep getting whiplash back and forth, you're not alone. You're not the only one. It's just that the good traders, they just stay out. And so again, this is when you need to really, really stick to your rules, really, really mind your risk, decrease your lot size, because you don't really know where these markets are going to go. And we're honestly overdue for a crash. Like, there's a lot of geopolitical stuff going on. Like, I wouldn't really necessarily be risking a lot anyway. On my funded accounts that I'm trading, I've tightened up my risk like crazy and really decreased the amount that I can lose in a day. So hopefully that answers you guys' questions, and hopefully this gives you a good breakdown. Just find me in the chat if you need anything. But again, I'm really looking for really clean setups. I'm not trying to risk anything unnecessarily. And to be honest, the last 2 weeks of price action have not been great. Not been great at all. So yeah, so I'll let you guys go. And yeah, that's all I got. So I don't think anybody's online. If you are online, add 30 comments in the chat. Peace.